Graziers across northern Australia are stuck between a rock and a hard place. They want the dry season to continue so they can load as many cattle onto boats as possible, but they need some rain fast. Why? There's a looming threat of an explosion of bushfires, exacerbated by the massive fuel load created by the late finish to the last wet season. Here's a map of bushfires compiled by America's National Oceanic and Atmospheric Administration. Now, it doesn't show you how big the fires are, just where they have been and are located. Beef Central's online newsletter reports huge areas have been burnt out across the north. On some properties, the losses are up to 40%. In the meantime, the live exports are flat out. That's when the cattle can be found. The ocean shearer topped up in Darwin last week, and topped up certainly means what it says. After more than 6,000 came on board in Townsville, another 18,000 went up the ramp in Darwin. That figure of well over 24,000 steers and heifers is probably a world record for a cattle shipment. That Wellard ship is pretty fast. It's due in Indonesia Monday or Tuesday. And now the question across the north is, where are the cattle? Cattle meeting the export specs of less than 350 kilos are becoming increasingly harder to find. Steers ex-Darwin are quoted at $2.10, although that figure has already been topped by a couple of buyers, and heifers are at $1.95. Now, at the sale yards last week, fine weather lifted numbers, and despite the fall in the Aussie dollar, export and domestic demand remains sluggish, and restockers have lost some interest as well. So most indicators fell, but it's worth pointing out that those prices are at least equal and in most cases above the price for this time last year. And this crucial overall marker, the Eastern States Young Cattle Indicator, is 32 cents up on this time in 2010. Lamb prices lifted last week. Demand remains strong. Young lambs dominated numbers, and restocker and feeder interest remains consistent. That price is in line with last year, while the mutton price drifted a fraction later in the selling week. To grains now, where the week in Chicago is mostly negative. Production fears on corn have eased, and this impacted the nearby wheat pit, where there are problems with exports as Russia continues to undercut any price America is offering. Traders suspect that soybean price might have turned at last. While hedge funds have provided most of the activity for corn, the next month or so will be crucial for wheat and where its price might be heading. Now, local wheat. And the latest figures show wheat stocks in Australia at the end of July were substantially above the volume for this time last year. ABS reports the figure at 12.6 million tonnes. Last year, the end of July tonnage available was just 4.4 million. And of course, this points to massive storage and transport problems ahead come the next harvest. A genuine headache for growers and exporters. Current spot prices are softish. Wheat has steadied, but both canola and sorghum prices were down. Local futures fell in sympathy with the Chicago losses. Wheat for January on both sides of the continent dropped $6. And in New York, the cotton price reacted to further contract cancellations by Asian buyers, while sugar remains relatively firm. The fundamentals are putting somewhat of a lid on cotton. Demand is just not there, while cane growers would be very happy if that price stayed in place. Finally, to wool, where buyers and sellers are being forced to react almost by the minute to currency changes. Last week, the flight of currency to so-called safe havens dropped the exchange rate, but it also killed confidence. Thus, the market slumped, despite some excellent wool on offer, especially at Newcastle. At the close, the Eastern Market Indicator stood at 1,274 cents, a fall of 1.5% for the week. And that's the Landline check on prices.